Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar going to react from the FOMC yesterday and had the euro. And the euro actually hit the targets that we're looking for here overall. Let's go and bring it up here on the daily. When we done the Asian analysis, we were talking about if we could get a daily close. This is our target that we're going to go to for 1445. We've since gone and pulled back. Also looking here on the dollar yen. Remember our Asian analysis, we're looking for a move down here to 1034. Now, eventually we think we can get to the pivot, which is 927. I think we had that marked off on here, but we got here on the daily. Oh, I had the wrong thing marked off. Sorry about that. Just down here at 927, the pivot down here. Right there. But we did go and hit this 1034 here, and we're coming off a little bit off of that right now. Currently at 1041. I think I just saw 1044, so a little bounce off of that. Our initial target, which was 1034. Cable's eased back here to this 3158 area here. Gold did go on to get a move on here. We're talking about, it didn't quite make it up here. We made it to our turn. Remember we said we were looking for 1318 here, but I thought we'd even make a push up at here, 1323. Now that's from yesterday. We're looking for a move up to about 1318 before you saw a reaction. Well, it looks like we made it up to 1318, and we're still pushing up a little bit. That first blush here, yeah, actually not bad. The first blush took us right there. Look to 1317. We're looking for 1318 before you'd see a reaction here on the gold. And dollar peso, oh my goodness, this thing has really, I mean, I'm even very, very surprised to the extent that this market has fallen. I mean, obviously there's some good demand really coming in right there, down to 1865, and a little bit more here at what, 1875, which is where we're at. I would have thought we'd got a bounce before then, but look at crude over here close to $60, and obviously we got that close above that key, that 58.96. We finally were able to secure that close. So shoot, this thing has really gone and moved and continued its upward trajectory. Also looking at the dollar index, we had our initial target here, this 9605, 9608. Well, you know, markets usually go beyond that, and we certainly did go on and do that and push. I thought we might even make it all the way down here to 9565, but we found a little bit of a bid here. But I think that the dollar will be a sell on rallies. We'll see how much further we can rally back up. Resistance probably going to come around that 9621 if we can make a stretch up to this mark. We did get that slide in the S&Ps. They popped back up. We were talking about that be, you know, I'm even surprised they even made it up this high, to be quite honest with you. But we've since turned around and given that up, and we're pushing back as a move towards these lows again. And And looking here, dollar CAD, as the dollar paired back and crude continued to strengthen, we did see the dollar CAD react and come down here to that 3260-ish area here before trying to bounce back up. Not sure what dollar CAD is going to come to at this point now, but we'll move into the news, and then we'll jump right into the analysis. On the morning bid, May last throw of the dice on Brexit. Today, British Prime Minister Theresa May will put the case for a short Brexit extension to 27 other national leaders of the European Union before leaving the room for them to deliberate without her. It's expected they will offer her that short extension conditional on her persuading the UK Parliament to finally back her divorce package by next Friday. If she does, Britain will, in a couple of months' time, be leaving the EU via the agreed transition period. But if next week she fails yet again to win Parliament support, there's divergence on what happens next. EU President Donald Tusk, backed by Berlin, has suggested there's readiness to fight to the very last minute to avoid a no-deal Brexit on March 29th. The tone from the Paris, meanwhile, is markedly different, suggesting a no-deal Brexit would be inevitable. Such rhetorical tensions could be part of the good cop, bad cop routine. That's often a feature of the EU crisis moment, but that does not make the outcome any more predictable. Potentially just as important for Europe's long-term future will be a discussion among EU leaders at the summit of how to deal with China. The expectation is that they will move towards a more defensive strategy on economic ties with Beijing, for example, imposing restrictions on the till now largely unfettered across the Chinese business has enjoyed in Europe. The rich irony is that as they do this, Chinese President Xi Jinping will be arriving in Italy for a trip during which is due to sign major bilateral trade deals with Rome, regardless of the common policy on China, which Brussels wants to foster. Sure enough, okay, all right, populist. Well, once again, I'm not interested in the politics. World markets' reaction to a super dovish federal policy message is not unlike the response to the European Central Bank equally easy stance earlier this month. The benefits of a reduced interest rate zone are laced with doubts about what is lurking in the shadows, questions about growth and inflation, and the long-term anxiety about ever normalizing policy settings. And with the policy pivot now complete and fully priced, the deep doubts about what now happens with the Sino-US trade talks and Brexit bite a bit harder again. After weeks of speculation, the Fed delivers its patient pause with gusto, wiping its own forecast for a 2019 interest rate off the table and prompting many market players to assume this is the peak for interest rates and the central bank is done tightening for the cycle. On top of that, if agreed to the end in September, its rundown on financial assets on its balance sheet, Wall Street stocks, which have rallied more than 12% so far this year, largely of this expected change of tack, ended in the red last night. The VIX volatility gauge popped back above 14%, and the S&P futures are still down the first thing today. European stocks open lower. 10-year Treasury yields have fallen to the lowest level since January last year. The worrying growth signals now reemerging from the 2 to 10-year yield that is flattened down back to 13 basis points, near its lowest levels of 2019 so far. After its biggest one-day loss since January and Wednesday, the dollar index has stabilized a bit today. Euro-dollar has climbed back above 114, but remains off Wednesday's peak, shy of 14.50. Emerging markets are a big winner from the Fed move, more than U.S. or developed markets, with MSCI's emerging currency index hitting its highest level since last June. First thing today, in China's offshore yuan hitting its best levels with Japan closed. Shanghai stocks ended only marginally higher, with Hang Seng's falling 0.7% after Trump suggested this week of keeping tariffs on Chinese goods beyond these trade talks to keep pressure on Beijing has added to anxiety about any final agreement. But China said on Thursday a U.S. trade delegation headed by Trade Representative Litzinger and Treasury Secretary Mnuchin will visit Beijing on March 28-29 for another round of negotiations. And let's look here. Do have a Swiss National Bank policy decision. Also, we have UK Federal Reserve, UK retail sales, but Bank of England decision is later on today. And Philly Fed comes in along with the standard jobless claims. The Canadian dollar strengthens and oil rises. Dovish Fed pressures the greenback. The Canadian dollar strengthened against its U.S. counterpart on Wednesday as oil prices rose and the greenback was pressured by more than dovish expected interest rate announcement from the Federal Reserve. The Fed bought its three-year drive to tighten monetary policy to an abrupt end and abandoning projections to any interest rate hikes this year amid signs of economic slowdown and saying it would halt the steady decline. The price of oil, one of Canada's major exports, was boosted by U.S. government data that showed tightening domestic oil supplies. The modest gain for the loonie came one day after Canadian Prime Minister Justin Trudeau's government lavished new spending on the middle-class voters in its budget on Tuesday, as it forecasts a budget fiscal deficit of $19.8 billion. The budget contains spending measures that could lift gross domestic product by 0.2% this year, which is not enough to move the dial on the Bank of Canada policy. The market shifted from expecting further interest rate hikes from the BOC, which has tightened by 125 basis points since July 2017, to seeing potential for a rate cut on data showed a slowdown in the country's economy. BOC watch. And Australia New Zealand dollars soar as robust data wrong-foots bears. The Australian New Zealand dollars rallied on Thursday after upbeat domestic data broadly wrong-footed the bears, betting on weakness. The rally began when U.S. Federal Reserve policy decidedly more dovish than markets had bet. That led to just one more hike that penciled in for 2020, and investors doubt that would ever happen, instead pricing a real chance of an easing by the end of the year. In contrast, markets have now begun on the aggressive easing expectation for Australia after data showed jobless rates look for a surprising dip to 4.9% in February. That last time was lower than it was in 2008. That will be the relief the RBA, which has been confronting on labor market to stay resilient in the face of seemingly slower economy. The data buys time for the RBA, which is trying to reconcile the deterioration in growth in the second half of 2018 with a strong labor market. These data counts toward downplaying the slowdown in growth, and although we think the RBA will remain on alert, it tries to get a better read on the state of the economy. And lastly, the euro and yen gain after the Fed dovish policy hits the dollar. The Federal Reserve's dovish confirmation fired up a rally in the euro, yen, and Aussie dollar overnight and into Thursday with the greenback near two-week lows. Norway's crown was slightly firmer ahead of Norway's central bank decision. The Fed on Wednesday all but abandoned plans to raise rates this year. The euro was as high as 14.37 and 14.48 overnight, its strongest early since February. Against a basket of currencies, the dollar index hit its weakest since early February. The Fed delivered a surprisingly dovish message. The downward pressure on U.S. yields continued to support our outlook for a weaker U.S. dollar. Sterling edged lower as investors fretted at a no-deal Brexit next week, as still a possibility after European Union made a delay to Britain's departure, contingent on May getting a withdrawal deal passed by Parliament. May lost the first two attempts to pass her deal. Sterling is 0.2 lower at 31.65. The only solace for the dollar was that other central banks around the globe have also turned decidedly dovish in recent months as growth slowed pretty much everywhere. So let's go on and move into the analysis. So the euro turned bullish because we finally got that daily close above 1340. And we thought, that's from last week, we thought it'd make the move up to 14. But what we were targeting is this move to 1445, which actually it already got there now. So we were thinking that we not only could go there and take a pause, we probably can move even further ahead. But as I said, all the other central banks are taking things easy too. So we made a pretty good little run here. We've eased back, probably looking for an area of support here, but we have ticked off this initial target here of 1445. So where do we go from here? Let's go and move into the 2-hour chart. Let's take a little bit, and we've also broken this trend line, which is key. in time, we may try and make it up to that 1486, but that's still a ways off. We did make it up to this 1445, so let's see where support's going to come in. Let's just dip just a little bit lower. I see that 1384. $13.84 is also the 23%. And the pullback down here would drag it all the way to $13.59 if we get that pressure from the dollar. We'll split the difference right in here and come in at right across here. We'll call it 1377. They'll call it the 1378, which is just a hair bit past the 23% of this back. So we'll go with 1377 for support. And resistance, short-term basis. It's going to be 1430. And let's go move into cable. Well, we had a support here at 3147. And let's take a look at a fib on this here. Well, 3122 would be the 61% back. And we'll go right here with this 3128 for support. 3128. And resistance will come in right there at 32.27. 32.27. Let's move this in here. And moving into the Aussie dollar. Now we did get past the 71.30. That's been holding in place for quite some time that we've had here. The 71.30. So what kind of a move back did we get? Let's go and take a look here on the fib. We actually made it right here to the 78% here. Look at that. Resistance comes in actually just right there. If you see that, this little level here. They actually that's actually where they took it to 71.68. It's actually 71.69. Well, on a very, very short-term basis, support comes in at 71.26, but we're actually going to go and have a run down here, offer this support to come in right here at 71.18. 71.18. Taking a look here with the Swissy. Well, we did go and get a good little pullback. Not anything huge, but coming down here on with the dollar pullback. This came pretty much close to 50%. It's actually held up very well. Let's go and take a look on the 2-hour chart. we'll stick with this. I mean, with this level here, which is going to be 98.91. The resistance coming in right there. It might even be a little bit of a far-fetched run. No, that's it. If we get that decent little rebound, it's held up better than most for the overall. We'll go with 99.76. We can get that little bit better rebound here, and look on a fib back, may come in around a 38%. Yeah, just about. 99.83 would be the 38%, but pretty close to 38% back. So it'll be 99.76. Now moving on to the Canadian dollar. We did get another pullback yesterday, although the market's still relatively resilient if you consider where crude is. It's just a spit away from $60 here. Let's go and move into the 2-hour chart. And this area, this 3271, as a 2-hour close, is held up overall. I thought we might even have made a dip down here to the 3238 here, but we're still holding up relatively well with the dollar CAD in light of everything. But certainly crude oil has the momentum, so we may still want to push a little bit lower. But boy, it's been a pretty good little move back here. We're kind of hanging on. I think we're just basically stuck in neutral right now with the dollar CAD. And this one is really a tough call. On a short-term basis, I'm just going to go right there with 32.90 for short-term support. It's holding up well considering how high crude is, so just go with 32.90. With resistance at 33.37. And remember, we would need a daily close above 33.54 to really get this market, going. I guess we'll still give it the benefit of the doubt for the bullish bent. Moving on to the peso. The pressure that this market has been has just been unbelievable to me. There is some support there at 1875. And that's what I'm going to note here is just this support right here, 1875 too. This thing has just chewed up any kind of support level. And let's go and take a look for resistance. Resistance is going to be that 1892. 18. Right there. 1892.7. Still, that's a long ways off, but that would be, resist. I mean, this thing can bounce, but pretty tough to bounce where crude is at. But that's where the real resistance would come in on a very short-term basis, which was support to a certain extent. But it went right through it eventually. It defended it. This is just going through. I mean, continues to stay strong. That 58.36 was holding this market, keep it at bay on a closing basis. The next resistance I've got is 60.37. And like I said, we're just looking on a short-term basis, but it would suggest that we'd make a move up here to 61.32, but on a short-term basis, 60.37. Support comes in at 59.15. I don't trade crude. I mean, I've traded before, but I haven't traded in a while. And I'm glad that I have not. But boy, it's unbelievable how this thing just continues to push higher. And like I said, to a certain extent, the dollar CAD has remained resilient. I mean, we could be a whole heck of a lot lower. And let's go move into the dollar yen. Well, we did go and hit our initial target, which is 1034 here with the dollar yen. And we're looking for 927. There's our pivot, 927. Looking for additional support there. It's 1025. It wants to challenge that low, but there's some additional buying in here. But we'll go with 1005 is huge. I remember on the weekly. But if they want to test it and then dip back above it, we'll go with 1020. We'll call it 1024. And resistance would come in right there, 1073. 1073. And let's go move into the ASEAN. Well, we made this run up here last time. I remember telling in the room is that remember that resistance is right there at 79.37. And we sense ease back from this area. And obviously with equities moving lower, that's opened the door for us to move lower also. On a very short-term basis, resistance is going to come in right there at 79.14. Support on a short-term basis comes in right there, 78.62. Pretty clear. But like I said, keep your eye on equities because I think we'll be going lower. We talked about that. We covered that yesterday. I thought that what a little thing they could get, and I was surprised they even rallied that much on the FOMC is basically it's the last hurrah for equities. Moving on to the cash dollar index. Well, we've been pretty much focusing on the dollar, I mean the 2-hour chart, but we'll take a look at it on the daily. Did have this little support level they're trying to defend, and they may try and come up here towards this 96.30. So we'll go with 96.30 as our resistance. Support, will keep it simple, 95.65. We came very close. I thought we were going to actually hit it out. This is our area, the 96.0588 area here. As we push lower, it looked like they may make a run to that 95.65. We'll actually use that as our support. Now, resistance on a short-term basis is now this 1323. Remember, that's a 78% area here on that rally back, or when we were looking for a projection higher. You can make the case that we can push higher. We may, but initially it's going to be 1323. And also the dollar's probably going to try and make a little bit of a recovery. So resistance will be 1323. There's our 1318 that we had. We're looking for first blush, which wasn't bad because the high was 1317, or that's what we've run up to. But we'll be looking at 1323. And if you look on the daily, we've now shifted into buy mode here. And if we do see that sustained pullback in equities that we're looking for over the next 7 to 10 days, we can't, with this momentum here, we can start pushing up towards these highs again. Support's going to come in right there at 1309. 1309 for support. And now let's go move into the bonds. Oh, we made a nice little jump up here in the bonds. As the Fed's kind of eased up its own self, so resistance comes in right there at 66.91. And they got just a little bit above that. So 66.91 on the bonds. Support comes in right there at 66.57. Well, the DAX finally has pared back a bit here, and we stayed with this 11,729, although we had made a pretty good bolt up in here. But as we started to rotate lower, we said 729. That high area was in, well, actually it was 29 there on this bounce back. And we're looking at 11,586, which is right where they're at now. They have dipped as low as what, 11,545. Just moving this just a little bit lower right here. But you got to be careful because of these S&Ps. I think we're going to continue to move lower. So on a very short-term basis, there's your support 11,560. But once again, with the SPOs under pressure, you're going to have to be a little bit careful here. We're actually going to give a little bit more room now if these SPOs start to lighten up. And that's actually going to come in at 11,515. Resistance now is going to be right here, right there, 11,652. Give it just a hair more, 11,655, right there. We'll call 11,656. We'll see now. It's gonna on a short-term basis tilted towards bearish. Don't want to go bullish now after I've left it like that, and then so. So kind of holding our own up here at this euro, and as I mentioned, we're looking for support at 13.77 and resistance at 14.30. Dollar index is probably going to try and see if it can make a run back up here. Rebound high is going to be right around that 96.30 area. We do have jobless claims later on today in Philly Fed in the U.S. session. And after a little bit of fireworks yesterday, we can now let the markets kind of calm down and try and reset themselves. The interesting markets I'm looking at is this Peso. Boy, just from an idea of just viewing it overall. I'm glad I have not tried to joke. I'm glad I didn't try and catch any falling knives in this thing. Boy, this was just devastating how far this has fallen back. Dollar CAD still, like I said, treading water here, actually holding up relatively well when you consider crude up there knocking the door at $60 here. But that's what we have here on the crossover. I'll get this posted in the room, and good luck trading today.